Forces has announced that a flying disc has been found and is now in the possession of the Army.
CBR Street Gang, over lab by standing by, over.
All right, folks, let's go ahead and do a microphone check here. Let me know if you can hear me across the various streams going on here, including the public stream on YouTube and Twitch. And we're going to get started here in about a minute if you can hear me okay. Go ahead and just let me know in the chats there. All right, already getting some responses from these chats over here. Excellent, excellent. Let me know if you can hear me on the public side of things. That would be great. That being either YouTube or Twitch. And we're gonna get started even in under a minute here. All right, let's get this music under control here. And we're going to roll right into Macro Mondays. Hello and welcome to Macro Mondays here on Landy's Crypto Corner. It's a Cyber Monday at that. And today is November 27th, 2023 as I look over at the calendar. And I'm your host, Landy. We're going to talk about Bitcoin, Dixie, gold, and traditional markets today. We're going to take a little bit of an in-depth look at Bitcoin as we usually do. And we're going to start with the daily here on the Bitcoin in 60 seconds chart. And the Bitcoin in 60 seconds series is a shorts series on YouTube and x.com, formerly known as Twitter. You can find me, of course, here on YouTube at Landy's Crypto Corner or at CryptoLandy on Twitter. Now, I do typically pin the Bitcoin in 60 seconds videos. There hasn't been one recently, as Friday, you might remember, for those of you that were here during the live stream, my voice was not doing so well. I was hoping that it would that I would recover and be able to do a Bitcoin in 60 seconds sometime Friday or over the weekend. And unfortunately, I'm still not quite there yet. Hopefully we'll have one later today, where in that video I will be reviewing some of the things I'm going to be talking about today, that being the longer time frames like the weekly. We'll see which one I end up landing on for the Bitcoin in 60 seconds later today, but hopefully I'll be able to get that one out. So Bitcoin has begun to pull back here on the daily time frame. We can see that it is still trapped in between the two weeklies here. We did get one close outside of the weeklies, outside of the other close that we had up here. This close open from the 15th and 16th. And we did get two closes, actually. We got the 24th and 25th closing above this weekly here. And we have seen Bitcoin head towards that monthly overhead at 38.5. Now, it didn't quite hit it, but this is good enough, and it's begun to pull back. So coming up just shy there at 38.454, whereas the monthly is at 38.491 or 38.5 if you like. So that does fulfill my criteria for upside targets hit. The next area above there, of course, would be the weekly at around $39,000 to $40,000. And subsequently any closes above there, and we would start to target this weekly up here at 41.8 to 42. Although it does not look like that is the move that is going to happen right away, at least. In this case, Bitcoin has put in hasn't solidified the high yet, but if we do see today's candle close below this open here from the 24th, that being Friday's candle, that would be at 37,300. Then I would look for a little bit deeper pullback, maybe a little bit of knocking around the high if it is going to try up again, maybe up towards that monthly again at 38.5. But realistically, it does seem as though Bitcoin wants to test down a little bit further. Now, from a support and resistance standpoint, we can see that the weekly here at 37.7 is about in line with the daily upper first standard deviation there at 37,630. So if Bitcoin is trading below that upper first, I would expect it to keep hanging around this basis band, which we did see run on this wick in the current daily candle. And that's coming in at around $37,000. Now, if Bitcoin does lose this area, we can see that the next weekly down here at 36,200 is coming in line with that lower, the lower first standard deviation is coming in line with the weekly, not the other way around. But in this case, that's at 36,200. If we do see that area lost, I would look right back to this low side structure at around 35,750. And, down to around that lower second, which is coming in at roughly 35.5. If that area is lost, I would be looking right back to the monthly at 35K and the weekly just below at 34,750. Now, if we did see that area drop, I do think that that has some longer term time frame implications, as we'll get into a little bit later here. But for local structure, I would start to look at the wicks down here. We do see 34,500 as being an area that had two nice wicks thrown in at it. Just below there, we see a wick coming in at around 34 to 34.1. If that's lost, we look down to this close open on the daily. This is kind of the line in the sand for closes at around 33,900 to 34K, with the wick low coming in at 33.4 to 5. If that area is lost, maybe there's a pit stop at this close open right here from the 23rd into 24th of October at around 33K. But realistically, I'd be looking for a test down into this daily untested area at 32,400. One of the main reasons why this is an important area is that this daily was part of a redistribution structure, or a distribution structure on the daily and weekly timeframes that played into this close open that happened on the daily, weekly, monthly area at 31.8. Now, this was tested as resistance, but not as support. So we have not seen this 32.4 to 31.8 area tested as support. And just to kind of call this area out, This is from, well, let's go ahead and actually zoom in a bit because that is a lot to look at right there. All right, when looking at the daily area, we see that in May of 2022, we had the big spike down into the mid $20,000 area, so mid $20,000 area at around 25,300. Bounced up in that same wick in the lower term timeframes, made a lower high, came down, tried to bottom, started to consolidate, made a lower low on a close, and then it popped back up to actually put in a 3-candle high. And this 3-candle high did define that monthly close open there at 31,784, 31,800 if you like, with the wick high coming in at 32.4. This is why this is an important area. If we do start to see the local range fall apart for Bitcoin in terms of this uptrend, which has been a sideways and up range to be fair, which is very, very, very bullish. So don't confuse what is happening here with what, a lot of pattern traders are going to call as, oh, it's a rising channel. It's a rising wedge. It's this, it's that. It's going to fall apart. It's, it's destined to be bearish. That's not always the case. And in fact, most patterns have a very low hit rate. It's really all about support. It's about trend first. And we do observe that there is still an uptrend. And if the trend begins to change, meaning we break the most recent higher low, which to be fair was also a bit of a, lower high, you can take one of two areas. There's kind of an argument to be made for these two closing lows right here. That being this low on a close open at around 35.5, or if you'd like, you can take that 35,750 close open. Now, that's where structure begins to really change on the daily. We did see that, this is technically a 3-candle, high if you were to put it on a swing chart, as is this close open structure, and this would all be lower high territory. So taking out one of these close open lows would put it into a bit of a downtrend, right? So, but this is painting more of a consolidation picture, and until we would see something like compression into expansion to the downside, that then begins to actually break down from this uptrending close open structure on the longer term timeframes, that's the only time that I would really start to look at that 32.4 to 31.8 area as an area that's likely to be tested on a support and resistance basis. Below there, of course, we would start to look at the next set of weeklies down here at 30,600 to 30,300. Other than that, a bit of a pullback here after a beautiful run up into this range and testing these monthlies and kind of trapping price in between this 35K monthly and this 38.5 monthly is, it's to be expected, to be quite honest. I'm seeing a lot of really, really bearish sentiment when, the market on the longer term timeframes is still in a transitional period. So let's go ahead and look at that. This is actually the 4-hour. We will look at lower term timeframes today. Let's follow up with the monthly. And we can see that the monthly upper second standard deviation has now been tested. This is something that we were looking for at the close open of the prior month, the October into November candle, after closing above the upper first. And I did note that because of the slope of the upper second standard deviation, that, it's likely to result in a rejection, and or if we see a close above, I wouldn't be surprised to see a high put in on the monthly. But anytime we do see a close above the upper second standard deviation, that begins to kick off expansion aggressively to the upside on the monthly, which has always led to a new all-time high. Although in prior cycles, Bitcoin did not have a major high in the monthly directly above that upper second standard deviation on expansion. So there needs to be some caution exercised, even if we do happen to see the upper second standard deviation closed above, that being at around 38,500, which would also be a close open reclaim of the low prior to the high that was put in there in March of 2022. And, Bitcoin's just been kind of slowly plotting its way up here. I should say it was slow over here. It was a pretty quick move to get up here after this longer form consolidation. And quite honestly, the monthly close open here at 30,400, 30,500 area is massive. This is a big structure on the monthly. I would be very cautious if things did start to fall that way of getting too bearish, because this is a major support area. It was well tested and demand came in to push it through that area. So, and on the bottom side of that, there's the $26,000 monthly close open as well. And we will update the Bitcoin in 60 seconds chart to reflect those monthly close opens as well. Or we can revisit, we can just revisit the monthly support and resistance zones. We can throw on our swing chart here, which is just it's labeled a Gann swing, but it is, just a swing chart. It's swing highs, swing lows, and that being the swing high, swing low wicks in this case. Let's go ahead and get rid of the Landy bands, which you can find for free in the link in the video description and or on my X, or formerly known as Twitter.com profile there. So when looking at the swing chart, you can see that Bitcoin put in, that major low right there at around $26,000. Lock that in October. This is gonna remain upside pressure, I believe, through December at minimum. That does not rule out larger pullbacks in between and or coming into the first quarter of next year. So just above this monthly that it just tested in and around at 38,500. There's not too much in terms of close open structure. If it can sit above this close open over here on the monthly at around $35,000, I would expect it to continue to test this monthly here. And then the next big area above there would be the close open at 45 to 45.5, and then possibly that wick high up there at 48 to 40 to 48.5. And quite honestly, that would begin to kick off that aggressive expansion to the upside on the monthly. And we can see that we're already beginning to see the etchings of expansion on the monthly. So this is telling me that, any kind of wider, longer term pullbacks are going to be picked up. That is what this is currently telling me. Of course, what this means for you and your trading plan or accumulation or whatever that is, that is very individualized. So that's not financial advice, but from what volatility is telling me and from what the structure is telling me right here, any kind of major pullbacks are going to get picked up, especially by myself. And I've well documented here on this channel my accumulation under $20,000 down to the actual low where I had some of my biggest buys there at 15.5. And that's for long form accumulation. And right now, I'll be frank with you, I'm in a short position from over the weekend. The spike high at the monthly is what got me into that short position already. And it was a starter short position, and then confirmed a bit over the weekend on some failed bounces up to retest. So does that mean that I'm macro short? No, absolutely not. This is just trading. Short-term short positions for the local range. And if the local range begins to break down, then you hang on to it and hedge on the other side at some of the major support areas and get a bracket position going. So, a scalp that can turn into a swing position that can then turn into a hedged position that brackets a range is the way that I trade. It's the way that I'm going to begin to teach people to trade as we get into ETF launches and options, because you could take calls and puts, and you can bracket price on both sides through doing so through the implementation of different option strategies. So that's going to be something that I'm going to be talking a lot more about. And I'm a big fan of butterfly trades and iron butterflies and all that for ranges. And that's something that I will get into when we begin to see when options actually launch, and it's something that's viable for me to be showing you here that you can then go and investigate for yourself as well. Now, monthly looks good. It's an up candle as it stands right now coming into the end of the month. A reminder that we're going to see the close come in on the Thursday into Friday candle. That's going to be the monthly close. So keep that in mind. Now, when looking at momentum, we can see that Stoke momentum is still pointed to the upside here with the pivot at around 27,600. I do expect that to aggressively update somewhere around, the $28,000 to $30,000 region. I've given it quite a bit of slush there, as it's not quite clear what. We can actually see that this is going to become overbought if the monthly closes above 31.8. Now, I usually don't use this overbought and oversold because, it's wildly inaccurate unless the K and the D read are close to the 80 or the 20, being the overbought at 80, 20 being the oversold. In this case, you could see oversold is impossible from here, as this would be, negative $50,000. So, but because the Stoke is right up against the 80 read there, we can see that a close in this monthly candle above 31,800, which just so happens to be that major breakout area at 31.8 that Bitcoin completed last month. Well, we can see that we are going to have an oversold Stoke. And the last time that we saw, just for reference, the last time that we saw oversold or overbought, not oversold, geez. The last times that we have seen Stoke get up there, well, it's fairly close in 2016, so we'll mark it. It's close enough. It is not overbought here, but the K read did dip in there. Both did not get in there. But we'll say the K read in 2016 got in there twice. We've got going back much earlier in Bitcoin's history in 2013. And then the last time that it got up here on the first tick, we'll just take the K read there. Well, when investigating this, excuse me for coughing into your ears, we can see that it got there in 2016. You did see that it kind of rubbed up against that area and then turned, but nice higher low structure on the monthly and then takes off. Next time it got in there, bull run up into the 2017 high. And this is a scenario that we've talked about where we could see a 3-candle structure comes down. We had a nice sideways move, 2 nice big up candles here. So from 15, price went pretty much sideways. 2 nice up candles into overhead resistance at this. I guess this would have been a lower high that it ran right into, but was that the upper second standard deviation? It was not. It was not. No, it was actually. You know what? If I had only looked a little bit closer, and here we go. So this is actually a scenario where Bitcoin is, kind of copying what it's done in prior cycles. Now, this would be the equivalent, this candle from June of 2016 would actually be the equivalent of what we're seeing now at around that 48,200 to 500 area. And we can see that it did slightly close above that area, but it did not close above the wick high. That's kind of what I'm talking about. And then you see a 3-candle structure down. It does not complete a high, though, on a close. It does get a higher low on the wick there, though. And then the next time that we see Stoke go overbought, we get a massive bull run. This is essentially what I am looking for. You can see that the one time prior to that was just straight up close above the upper second. Now we did see that upper second close, and I have actually called this one out before, where we see it breach the upper second, comes down to the upper first, and then bull run. Because every time we see the compression come into expansion, it has resulted in an upside move. And we've already seen the expansive downside move of this cycle. It's done. It's over with. That happened from 2021 into 2022 and the beginning of 2023, where compression is in play now. And we've already seen what we saw in 2014 into 2016. So this was a much longer bear market here. But in this case, well, was it that much longer? Yeah, I guess it was. And in terms of time frame for how much time it actually spent on this double bottom low, it's probably about equivalent, to be honest. We could measure it, but I'm a little too lazy to do that right now, because that's not really the point of what I'm going for here. In this case, we can see that we had this, we had the breakout structure that took out this high wick from 14 over here after we saw the close in May of 2016. Took out this high, and then it swings the really big lower high area in 2014 there, which, I actually remember some of this, funny enough. This was when the wick high was coming in at $685. Wouldn't you have liked to have stayed in a position from there, huh? Whether it would have to be spot. And in this case, we see a higher high put in, but we have higher low structure being built on this monthly here. Heads up, new all-time high. The last time that we saw Stoke on the monthly get overbought was on the close after the upper second standard deviation close here. And that was the upper second standard deviation was closed above in October of 2020. The very next candle close open from that October kicked off expansion, and it closed in the overbought zone of Stoke. And then it was, that monthly. So 1, 2, 3, 4, 5 up candles on the monthly. So, we're looking at a very similar situation right now, with Bitcoin not being, close to and or above this high over here at 45.5 on a close and 48.250 to 48.5 on the high. So it is painting a picture more like that 2016 time frame, where we could see even a close above here, but more likely, if it doesn't close above there, we see some sort of a 3-candle structure that might even come back down and retest, that $30,000, mid $30,000 area. It's not out of the question by any stretch of the imagination that then, gets overbought on Stoke or puts in a little bit of a high on Stoke like it did back in 2014, 2016 timeframe. And then, subsequently goes on a run from there. And that would fit. I would like to see it above that 48.5 though, and getting above that upper second to really call that out. And right now it is getting a little extended on some of the lower term timeframes. And as we go down the timeframes, we can investigate that a little bit closer here. Let's use the Coinbase chart to do so. As they are going to be the custodians for for the spot, for most of the spot holdings of these ETFs that, it is inevitable that they launch. It's not an if, but rather a when at this point. And it's just time horizon, right? When looking at the 4-week, which is closing with this weekly candle. Now we will see the monthly come into play here for the close Thursday into Friday, but we are going to see a 4-week candle close shortly after that on the weekend. And this is threatening to close above the upper second standard deviation. Now, I have not done a super deep dive, but we have gone over this before. When we do see expansion on the 4-week, that's going to lead to more than likely a test to this upside. And that does not mean that it cannot back test like the upper first and still maintain healthy structure and healthy expansive structure in that case to the upside. And this is coming in at 30,400 right now. That's right on the weeklies and right around the 4-week highs as well on the swing chart. So there's 2 weeklies there, 30,600 close, 30,300 close. If that was to get tested, I absolutely have no issue with that. And I would actually like to see that. Doesn't mean we're going to get it either. The upper second standard deviation is right there at 35,650. So, if it does close this coming weekend above there, then we are going to see aggressive upside expansion. We're already seeing the etchings of it, 20/19 on the BBWP. So when looking at this, it is in a little bit more of a neutral posture, but a close above the upper second will turn BBWP back to the upside, thus kicking off some more aggressive upside expansion. And, this is where the next big area on the 4-week comes into focus, and that's around 46,850. So right there between the monthly close and the wick high there of the lower high of the bear market, that 45.5 to 48.5 area. So about a $3,000 target, and we see that there is a major close open in there, even with this possible morning, what could have been a possible morning star reversal, if we did see a close back then above that 47,300. I bet you Sam Bankman-Fried would have loved that one, right? Because it would have kept him alive a little bit longer and maybe out of prison, because he could have run his grift for a far longer period of time. But yeah, I think it's good that players like that get washed out of the market anyway. And now, of course, we've got CZ facing possible time in prison as well. We'll see if he actually ends up serving any of that, though. And yet he still remains on the board over there at Binance. I don't really have an opinion one way or another. I think that all the Mickey Mouse exchanges are going to be gone very quickly as liquidity moves over to an ETF wrapper. There's going to be so many ETFs, and you can trade them on every major brokerage around the world once they're approved. So it can be internationally traded, and there's a lot of oversight. Plus you can have, there's going to be people looking into custody and which wallets are what. You're going to see all the quant guys come out of the woodwork. You're going to see a lot of applications that are going to be built around options and custody moves and holdings, and they're going to be once they figure out that ETFs work on a creation unit and redemption unit basis, meaning creation and redemption is the process, then you're going to see them start to get into quant analysis of that stuff. So that's where all of the money's going to be. And I think that a lot of these Wild West Mickey Mouse exchanges are going to go away, which I do think is good for the maturity of the crypto space. As for the regulation side, that's a whole different story. As for, the conspiracy theories about, they're going to seize everything and take it away from us. And, if you're a big Bitcoin guy, that's a big concern. That's not really relevant just yet, but if that conversation does become relevant, of course, we will be touching on that. I do think that this is a good thing for Bitcoin, though. And here on the 4-week, you can see that, a nice reclaim of this low over here is what we're looking for by the end of the weekend, and that's at 37,700. So we do want to see a close open reclaim. Now, it can also claim the swing low, which it's, more than likely going to happen at 33K. There's a lot can happen before the weekend here, but, it's looking encouraging that it could close above the swing low, thus keeping this 37.7, which is also a big weekly close open area as well as the 4-week. This is going to be key to watch out for coming into the weekend. So we're going to take a look, of course, on Friday at where the monthly closes and opens and what all the pivots are and where is volatility in relation to all of that. But the 4-week closing just after that is going to be pretty important as well. So to keep bulls' hopes alive in the shorter term timeframes, not longer term. So I want people to understand that maybe I'm, coming off as a little bit bearish for a larger pullback in some of these longer term timeframes, and even based on some of the shorter term timeframe price action right now. But one, that's short term and it can change very quickly, right? So, I took my base short at around that monthly area, and, then on the weekend when things weren't, heading up to where they should, I took another bit and put onto that short. But I'm also extremely long spot, and I still have swing long positions open. So, this is where, it's more of a hedge than anything else. Plus can make some money day trading. But I'm willing to let those positions go quickly if price rises quickly, and I'm willing to hold them into supports. And in this case, for bulls to keep their hopes alive, to keep running this area, they need to close above 33 to keep things in that 33 to 37, 38K zone. Above there, then we can start looking, if we do see a reclaim of that area, we can start looking at this little close open at 39,500. And that's where the weekly is coming into play. With that 39 to 40K weekly just above the monthly at 38.5, it comes into play also on the 4-week, where just in between that area, we have 39.5. So 39 to 40K on the weekly, and the 4-week agrees with that right there in the middle. Above that area, then we can start looking at that 45 to 48.5 area. And that would agree with expansion as well. So we do want to see closes again above that 35,650. We will revisit this 4-week coming into the end of this week during the live streams. We can see that it is now overbought on Stoke on the 4-week, and that's perfectly fine. It can stay up here for an extended period of time. It can even get a bullish reset in this area. It can come all the way down to the midline and still look very good. You can see that if it does lose the overbought area, that pivot number is at 31,224. So that it's more than likely going to stay in this overbought area in the next 4-week close open, unless we see something catastrophic happen between now and Sunday. And when looking at the 3-week, which will also close this coming Sunday, we can observe that Bitcoin did get its close open above the upper second standard deviation on the previous 3-week candle, but it does need to close above 37,864. I would just call it 38K. It might squeeze up above there around 37.9, 37,950, but it does update in real time, this upper second standard deviation. So I would be looking more towards 38K. A 38K close above, we'll see more aggressive expansion to the upside. We already see that it's kind of neutral right now in terms of expansion, which is implying that this is only just getting started. We are likely to see a crossover of BBWP. So that being BBWP over the moving average in the next 3-week close. And then that does mean that just before the end of the year, we'll have another 3-week close that we can then look at and say, okay, is BBWP over the moving average, and is the moving average starting to turn up? That would all be confluence to start pointing towards this being, all right, there might be pullbacks here, maybe even big ones, but its overall trajectory is going to be to the upside, and in a most likely in a parabolic fashion. And in this case, we can see the basis is turned up, the upper first is turned up, and we do have the lower first turned up. This is actually pretty darn important. We have the range that it built on the 3-week, and in this case, we have the beautiful close that reclaimed this low over here on the 3-week. Now, this is going to be a little bit different than what we were looking at on the 4-week, but the close open low is at 36,300. So, if it can remain above there, and especially above the wick low, which is still going to be that 33,000. So 32,933. Then that keeps the door open for the high side here. And in this case, it's coming in at around 46. It's coming in at that 45 to 48 area. So again, another confluence that's pointing towards, Bitcoin hanging out in this area, 33 to, 36. As long as it's staying above there and it does not start to break down from there, then we are looking at this heading towards that $45 to $48,000 area over time. And the upper first is going to be your first indication that things are going to test down much further. And currently it's sitting at 31.8. Of course, that is the breakout here. And if it does fall below there, then, I would be looking somewhere around the basis over time. I expect this to move up, though. It's currently at $26,000. It's right on the close open lows here. But I would expect that to be somewhere around 28, maybe a little bit higher, thus giving us the bias that 30,000, 600 to 300 area is in play. Right now, the upper first is still in play at 31.8. This, of course, is going to update this coming weekend as well. The 2 week, let's go ahead and look at the 3 week. What was the pivot on the 3 week? Stoke pivot is going to be 33,000. So this is still going to be pivoted to the upside. It will get back into the overbought area as well, provided it closes above 32,500. Again, everything's just coming up confluent with all of our support and resistance areas that we talked about earlier in the video. And we can see that expansion is going to likely tick up, and then we'll see mid-December, mid to end of December, we will see if it actually confirms that crossover. The 2 week is already pointed to the upside, and it remains up above $31,000. Overbought zone is going to be any close above 36,450. So keep an eye on that as Bitcoin trades right around $37,000. This, of course, is going to be closing this coming weekend. So just after the monthly close, we've got major closes to keep an eye on. And in this case, we want to keep an eye on this upper second standard deviation because we see that we have good expansion right now, just beginning, 24 over 13. And this would mean that any close above 36,300 at the upper second standard deviation, which just happens to be right around that overbought zone, which again, it's, don't look at overbought as, oh, I need to short this because it's overbought. You look at it as it's in the strong half. It's in the bullish control zone of momentum. It's getting expansion on the Bollinger Bands, and from a very deep level, by the way. This is some of the deepest compression we've seen in Bitcoin's history. Now, you do have to remember that it started out very high, and it's trended lower and lower over time as volatility overall, in terms of volatile moves, has decreased in the longer term timeframes on Bitcoin. So to get a little bit more of an accurate picture, have to go to the index for that. And you can see that this is, this is some of the lowest volatility we've seen on the 2 week ever. Now, it is lower than some of the basis volatility that we've seen in the past, going all the way back to, guess when? 2016. So when I say that this looks a lot like the 2016 area, well, we can see it structurally with the lower high of the bear market just above price action, that being the 41.8 area, that very similar to what was going on from the lower high in 2014 when 2016 went to retest that area. And, we're seeing very low volatility. This does, this is also beginning its expansion, which tells me that even if we were to see momentum or stoke turn down on the 3 week, it's more than likely going to get a nice bullish reset and remain very strong. So this is not to be taken as like, the move is running out, but more that the move is strong. And from the 2 week chart, it still has plenty of room to go. Now, closes above that 36,300 area are going to tick volatility to the upside aggressively. and it's likely to head into some of the areas right where we've been talking about. Take it one step at a time. 40K, probably see a replacement go on here. If we do see a close above the upper second, we're likely to see it in and around the current highs at 38 to 38, 4 to 5. And then likely to see that replaced shortly thereafter, the $40,000 area where the upper third currently is. Maybe that actually goes a little bit higher because expansion is just really getting rolling right now. If we see a reclaim of the low side structure on a close, which has not happened just yet on a close at 37.7, then it's fair game to go test, much, much deeper, I believe. If we do see that reclaim. Now, I would want to keep an eye on the breakdown candle areas. We see this candle from April. So this would be April of 2022 that actually broke. No, I'm sorry. You know what? It already reclaimed the breakdown candle there. So that was on the $34,000 close open here. So it did reclaim the breakdown. And that's a big area that you'd want to see hold when looking at 2-week closes. Above there, and especially above the wick low here at 33 and the close open at around that 37.7. If it can close open above there, then that's going to bring into play everything that we just talked about. 40K, get above there, and it's really one step at a time, 41.8 to 42K, but then above there, it's probably going to run right to 45 to 48 and a half. And, momentum supports this, and volatility supports it right now, as well as, structure. We got uptrend, and it's just about getting through some of those support and resistance areas, in this case, overhead resistance. And when looking at the weekly is threatening to turn on any closes below 37,500 this week. Not very concerned about it. We do see a little bit of a pause in and a pause and turn in BBWP expansion. And, this is, even if it crosses over and Bitcoin heads down a little bit, until we actually see a cool down period, which this would be a bullish cool down as it stands right now. This is upside expansion on the weekly. So, we would have to see, and I've mentioned this on the daily many, many times, we can still see BBWP get under the moving average, but if the moving average doesn't turn in subsequent closes, then price is still likely to keep expanding to the upside. Otherwise, even if when we start to see the first etchings of compression, so BBWP turns, moving average turns, we'll still see, as long as Bitcoin hangs out above the basis band or in the strong half of the standard deviations away from the basis, being the upper first, second, and third area, we'll see residual expansion of the upper first, second, and third. We'll then begin to see the lower first, second, and third curl up as we get that compression again. And that is, of course, as long as price is trading and closing above the basis, which is currently coming in at 30,300, which is right there on this weekly close open. So, this close open is very, very important if Bitcoin is going to head down there at any point and start closing, especially below 34,500 on the weekly. That would give us the bias that there is a possible retest of the area that we've talked about on the daily at 32.4 to the 31.8 wick high. Now, that's where below there, then the 30,600 weekly here and the 30,300 are going to come into play right around that basis. And this will update at the close of this weekly candle somewhere around the highs there. So I suspect it's probably going to be, 31, maybe 31 and a half or so. We will see. And then we're likely to start seeing the lower bands begin to curl up, even if Bitcoin is closing above that upper first, I suspect, as it has been going, about sideways and up on the last few closes here on the weekly, but remaining within that wick high that was originally set back here in early November. And, if it can't push above there and close above there, then we can't start really looking too much further up. Upper second standard deviation is coming in at 38.8, so just under our $39,000 weekly. That's this close open structure right here around, well, that's 37. I'm lying. Where's the 39K weekly? That's going to be this guy here. That's 42, 41.8. Where's the 39K? I know there's a 39K weekly. I know I put it on there for a 39 to 40 weekly. Let's go double check this. Oh, that's right. That's right. I forgot about this. So you got to work lows to highs, and this is the high from the reaccumulation to spring that was being painted. The Wyckoff reaccumulation to spring. This was the high of that area once this was broken back in 21 to new highs. That's right. That's right. So 39 to 40K is that area. Yeah, I knew there was a reason I marked it. And so that would be, you take lows to highs. So, reclaim the lows, 37.7. Then we look to this high over here at 39 to 40K. And then we look to the next area at 43. There's a higher low that's there. It's right around this order block as well. There's also a high in there at around 42. So 41.8 to 42. And then above there on the weekly, we've got the 46,500 with the wick high, of course, coming in at that 48,250 to 48.5, depending on your exchange. So, any close above the upper second would, really aggressively move BBWP back to the upside. And again, we could still see BBWP continue down, get under the moving average, but until the moving average and BBWP get a negative slope, not really concerned about expansion. This is, in my opinion, it would be continued expansion to the upside, and deeper corrections from this particular high structure are likely to get picked up around some of the important areas that we just talked about. All right. So really, this is a big week. We've got the monthly, and then we've got the weekly through 4-week closes, right? And then, of course, next month, we've got the monthly, 2-month, quarterly, 6-month, yearly, so on and so forth, right? And we'll get into that, late December, probably right after the holidays. I'll have a bit of a holiday stream coming into the January open. But, this stuff I want to make sure is very well covered before then, because there will be some time where, I'm going to be with family and stuff and not able to explain a lot of this. So very important to make sure you're paying attention during these kind of quiet portions in the market. And in this case, the 5-day, we see BBWP is cooling down. We do see a neutral look on the moving average here. Now, this is going to be our edge looking into the weekly, right? Is it going to continue to have a BBWP downtick? If we do start to see a negative slope on BBWP here, it is going to point towards this move starting to run out, go back into compression. And this is all just mean reversion at this point. And what's likely going to happen is even as Bitcoin pulls back, we're going to see that basis, continue up, probably above the supports there. We've already got a curl up in the lower first and lower second. We have the lower first almost, it's not almost. Well, it is. It's only $765 away from the close open high or low here. I want to see that lower first above there. So a nice little compression at the high here would do that. And then, of course, I also want to see the lower second above at minimum this last major low area at 25,800 or so on a close. Now, that's going to take a little while to get there, obviously, but we will track this 5-day coming into the end of this week and next week and so on and so forth. Basis right now being at around that 30,600. Of course, that is the weekly higher high. And, looks good, looks very good. As long as Bitcoin is hanging out above the upper first as well, even during a compression period, which is at 35,150, then the upper second is still fair game, even during the compressive phase of the BBWP in this case, as the bands are still, in an expansion and are, the basis is still rising as Bitcoin is trading above it. The upper first at 35,150 to the upper second at around 39,700. So basically 39 to 40K is going to be the main areas to look for, as long as it is above that upper first. The 4-day is looking very good. We do see that this is also starting to get a little bit of a cool down on BBWP. We also see a Stoke turn, 37,750. The 5-day, by the way, is 37.7 basically, 37,750 for the 4-day. And as long as we see Bitcoin remaining above the upper first here on the 4-day at $36,000 in this case, then that will make the upper second available as a potential target at 40,500. If it does lose the upper first, then we're looking down to somewhere around the basis. And guess where that is? That's at 31,400. There's support and resistance areas to be aware of before that area, but logical place to start looking for price to head if we did see that upper first lost on the current 4-day candle. We'll come back to it when we get the close open on that. Bitcoin threatening to lose the upper first on the 3-day candle structure here, which just opened as well. And that is at $37,000. So if it can trade back above there, again, upper second becomes a viable target. That's there at $41,000. And I suspect if we start seeing closes above 40K, we could see wicks heading up into the 41 to 41.8, maybe in $42,000 area. But I would exercise caution, as we do see that this is actually in a pretty heavy price compression on the 3-day. And in fact, this is probably going to be our best indicator, the 2-day and 3-day, as to what to look for next when we do see compression to re-expansion. So in this case, we see that above $37,000, Stoke will turn back up. It's trading right around 36,900. It's trading above that pivot right now. So in the next 3-day closure, we'll take a look at this, coming in on Wednesday's live stream. But, as it's going to close with Wednesday's candle, we'll check back in on what's going on. But it is looking very encouraging for the compression to expansion back to the upside. So at least in terms of pivot and compression, it's going to quickly begin to cool down here. And if it's cooling down at the highs, then it's going to be very easy to pick out the next expansion. So basically, it's either going to expand past the lows, right, at 34,800, 35K, and then begin expansion if it doesn't already fall through those areas. But if it does, we'll see compression happening in and around the structure still, I believe, at around that basis, which is coming in at $33,000. Lower first is down there now at 29. I highly doubt that we'd see like a shot down, but it is not out of the question during a compression phase. So just keep a close eye on it. If we do start seeing that upper first hold, not hold rather, but be lost, then keep an eye on around 35.5. That's going to be our main local area for the 3-day. When looking at Stoke, though, if it can close above $37,000, and we'll check on this again, but on Wednesday. But this is going to cool right down, and from everything else that I'm looking at, it's going to do what the 2-day is doing. Now the 2-day is not cooling down quite in the same manner. You can see that we did get a little bit of a bounce or sideways volatility into a bounce up into the moving average here, but both have a negative slope. This is a confirmed cool down, but as long as it's above the basis band here, it's more likely to keep running the top side of the bands, especially as they compress back into local structure here. The upper second is still there at around $39,000, so 39 to 40. We've got the upper first now at 37,400 to 500 area. If it does start trading back above there, then it could very easily run that upper second, and it's likely to push that to around 40 if it does start getting back above the upper first. Closing this candle below the upper first does bring the basis into focus, but it is rising quickly. This is at 35.5 again, right at this 2-day higher low structure. Now in the 2-day, we have higher low, higher high structure on the closes. And, that would be the next logical area to look out for, is that basis at 35.5. And we just talked about that area in some of the other time frames. So below there, the lower first is in play, but that is now in range. And that's actually what you want to see. It's right at the bottom side of this order block candle right here, which is coming in at $33.9 to $34,000. Below there, we start looking to the lower second, which is now right at the breakout, and that is at 31.8. What a beautiful, beautiful, beautiful way that this is lining up currently. So if we did see a sharp move down, guess where I'd be looking? On the very low side, somewhere around the lower second, the lower third, and the lower second's coming in right at a major support. Lower third is coming in slightly below there at around that $30,000 region, but essentially in that 30,300 to 600 weekly area, which would be a big zone of interest as it is. I'm not seeing signs that this is going to immediately nuke itself down into the lower second, lower third. But if it did from here in this current 2-day cycle, or candle, I should say, then I would be, very aware of those areas, even in the lower term timeframes. If it would destroy some of the higher term timeframe thesis, probably, but not in terms of the highest timeframe thesis that we've been talking about. But in that case, in the lower term timeframes, likely to see some pretty violent bounces from those areas. If it did get there. As it stands right now, I'd be looking for this to further compress. We're starting to see that volatility is going to very quickly drop here in the next close over close 2-day structure. So 37.7, and of course that's a weekly. So, when looking at that area, that's the weekly overhead that Bitcoin has not closed a weekly candle above. It has closed a couple of dailies above that 37.7 area here. But, above there, it's right back to looking at 38.5 to 39 to 40K. And that's all confluent with what we're seeing on the 2-day bands anyway. So that would also turn Stoke back up. We've already seen one bullish reset. Could we see another? Absolutely. If it does begin to fall out of the overbought zone, it's going to happen on any 2-day closes below 37,250 right now. So if this does close the next 2-day candle under $37,000, we're likely to see Stoke quickly fall along with volatility, as Bitcoin probably hangs out around the basis to a lower first standard deviation if that's the case. We do see that Bitcoin is on that basis today. We already kind of discussed this a little bit earlier, and that's at $37,000, $36,925, but it's essentially $37,000. And that lower first is above the last set of lows, and the lower second is coming right in line with this low here at 35.5. So if we did start seeing closures below 35.5, we're going to get expansion to the downside on the daily. That's where some of those deeper downside targets begin to come into play. I still wouldn't look too much further than the local structure down here at 34 and a half. If we start seeing that breakdown, then we quickly start looking at those lower targets. When looking at something like a 12-hour, we can also see the same kind of thing going on here, except the 12-hour, playing very, very nicely with the band's volatility levels. Losing the basis, though, brings into focus that lower first standard deviation around 36.6. Below there, we see the lower second coming in at 36K. So in the shorter term time frames, it is going to be pressure down below 37.7. So be aware of that. Trading and closing today's candle under that area is going to continue that pressure to the downside. We are seeing slight expansion, but because we have BBWP in the strong half here, or what is considered pretty volatile, but we have a range look on the bands, that means that running the lower second is likely to produce a very good bounce and still remain in higher low posture here on the 12-hour. Now, that said, if it does break down, it's, we did have a higher high than this high here, didn't break this high. I would say if we start to see that, it's just going to lead to more consolidation. 8-hour, we're looking at sideways and up. And bands are starting to get a little bit of a downside curl in the upper bands and lower bands here as Bitcoin kind of settles in around that lower first. What's the pivot here? 38,000. So as we're going to the lower term timeframes, it's a little bit heavier pressure down until we get to something like a 6 and a 4 hour, where we're starting to see compression, which is what we want to see. And the pivot's probably going to be a little bit easier to deal with if Bitcoin does put in a low. It's right up against the lower second. It's right in and around the wick highs of this little consolidation, the high side of this consolidation before it pushed up and then got violently rejected. So this compression to re-expansion until we see like a breakdown of actual structure, of this low down here again at 35.5 or so, not concerned about any of this price action. Now, if we do start seeing closes below the lower second that make it down there, I'd be looking out for it to reverse and then look for lower highs at that point, because we do have a break of this uptrend right here. So we had the lower low, we had a lower high, higher low, higher high, and now we've got a lower low than this last low. So yeah, I'd be on the lookout for lower highs in terms of just, trading intraday price action. And then maybe it starts to break down from there if it did. Otherwise, I'd be looking for further consolidation. We can see that this is starting to get into the oversold zone, and the momentum pivot on the 6 hours, 37,177. So basically 37.2. And the 4 hour is actually getting expansion to the downside, but this is expansion right into a consolidation area, and it's not really broken like any major structure as of yet. This is just a big consolidation on the highs as it stands. We do see that we had the lower lows, lower high, higher low, higher high, higher low, higher high, and then we had the this little bit of a consolidation, low to high. But then we have this would still be a higher low in my opinion. For going off closes, this was just a sideways consolidation. We've got now a lower low, though, on a close than this low over here. So the next thing that you'd be looking for, if it did not pass like this failed wick high right here, like 37.7, 37.750, is the potential for another lower high. As it stands right now, it could reverse off of this lower second standard deviation. If it starts to close above the wick high here in the next 4 hour candle at around 37,100, then I would be aware of this close open. The close open at 37,300 would start to turn the 6 hour, but it would also paint a technical low on the 4 hour. It would also get it above the lower first standard deviation there at 37,231. And then I would start to look at around 37.5 to 37.7 at the basis to this last wick high above there. The upper first coming in there at 37,900 to 38K. And then we're starting to look at some of those other timeframes turn bullish, and then we're looking for a little bit more extension on the daily, possibly back to the monthly, back to the highs at 38, and then the monthly at 38.5, possibly that 39 to 40K area. You can see how this all fits in, right? And closes above $37,000 would do that on the next 4 hour candle, which is not the end of today. That's actually in 25 minutes. And then the subsequent candle to watch into the end of today would be the next candle that's about to close open. All right. Been concentrating a lot on Bitcoin because I do think that it's important to have some context. I'm seeing some crazy, every week I say this every live stream, but man, when you've got the profit blues and crypto capos of the world and all of them that just they're ignoring everything for this big macro downside push. They're ignoring any kind of low-term time frame trades, and it's just fear-mongering. Not that, some of these crazy downside targets don't have technical areas of interest, to the downside at those crazy big areas. It's just nuts to be looking past any of the local structure and any of the more macro structure in between, which makes them grifters, in my opinion. And they're not the only ones. I'm seeing a lot of it, and I'm seeing a lot of it start to edge into play here around this narrative that traditional markets are in the process of topping out in a double top fashion. And we're going to look at that in just a moment. But just some really weird narratives headed around all of the fear in the global economic situation that many countries find themselves in particular the United States, being a producer of just about nothing. We export nothing at this point. We export misery, it seems. And don't worry, we've been importing misery locally and subjecting our own people in our country to misery for a very long time. So we've also been exporting it for a very long time. So, but in this case, there's no real exports, outside of the technology sector. So, and right now the hot thing is AI, and then you've got all the turmoil that's going on there. And, the macroeconomic picture doesn't look good from the Fed side of things. It doesn't look good from the Treasury side of things. So a lot of that is just fueling these crazy price target narratives that just don't make sense when looking at structure and looking at the actual auctions that are happening. And let's dive into that, because we can see that Dixie, that's economic data. We'll get into some economic data, as we do have GDP coming up in a couple days. And then we've got, PCE, we've got spending. I'm probably not going to do any. I'm not going to worry about any of that. And then, of course, coming into December, we've got Powell going to get out there and run his mouth again. He better do something for the good old Dixie here, because Dixie is starting to head down to our downside targets here. We talked about this, the rejection of the lower first standard deviation, breakdown back to the lows. We haven't quite seen a swing of the low just yet at 103.17, but it does look as though it's going to do one of two things. It's either going to try to higher low its way out, or it's going to lower low its way into this support structure down here at 103.10 to 102.93. Break even there is around 103. So, but this is showing the potential at the lower second standard deviation in terms of volatility that things could still expand down to that 102.5 now on the daily. We have spoken about that area extensively. Below there, we're looking at 102. But I would be aware of a bit of a double bottom going on here. It doesn't mean it's going to happen, but we are starting to see that things are getting close. It could have another push or two down. But in this case, 103.21 would start to turn momentum. And what you want to see for mean reversion like this, same for upside, right? But in this case, for the downside to mean revert back up instead of upside, that would mean revert back down. We need to see volatility get under the moving average, and more importantly, the moving average get a negative slope. And then we look to the volatility of the bands. Is it regaining that lower first? Are we starting to see the lower second begin to curl back up into the local support structure? And then we start to look towards highs, right? But if it can trade back above 103.57, I would look to that lower first. This is likely going to be right in line with that support resistance area at around 103.50 to 103.60. It's currently at 103.70 today. When it closes, I would pay attention to it. We're going to see continued expansion of the lower second standard deviation and lower first as the basis continues to head down. But if it does regain that area, be aware that this structure right here at around 103.82 to the wick high at 104.21 is going to be the next primary target. You could take this close at around 104 even as well. That is fair. But I would start to look towards that high side structure, as I do think the basis is going to begin swooping down through these supports, which is now, resistance overhead here. And, Dixie likely to continue its downward trek over time, but I would be aware of bounces. What does this mean for the market at large? It just means that you're likely to see equities do better. You're likely to see, the traditional markets do a little bit better and or hang on the highs. But this is threatening to put in a daily low pretty soon. It's not there yet. Obviously, it's headed down into its low side structure. If it breaks down from there, then we're looking lower. But it's threatening in terms of its volatility expansion. And maybe the 2-day says, hold your horses. We're still expanding to the downside. So, the criteria is if it breaks the wick low on the daily, it's going to head lower. 103 area, it's the area to pay attention to. Below there, 102.50. But just be aware that it could start bouncing around the current wick low, or throw a wick into that area. Closing back below the lower second standard deviation on the 2-day, though, is going to really bring into focus those further downside targets, especially if it breaches that 102.93 low. And, in this case, even on bounces on the 2-day back up to 104.50, it's still bearish all the way to anywhere below this last lower high on the 2-day, which is all the way there at 106. So from a structural point of view, it's still got plenty of downside left in it. In terms of this downtrend, could it get a trend break? Of course, above that wick high. Yeah. I wouldn't consider the trend break until I saw the 106 break up there. From here, as it currently stands, we need to see a different structure starting to be painted there. 104.66 is the momentum pivot on the 2-day as well. Pressure down. We're going to see this update later today. We're likely to see the lower second down into this support area here at 103. And we're likely to see continued expansion on the 2-day. That's going to lead into the 3-day, of course, which is threatening if it does close, and we'll follow up with this on Wednesday, if it does close below the lower second here at 103.38 to start getting expansion to the downside. Again, it's right into a pretty important area for Dixie. There is high support over here. There is lows over here on the wicks. It's kind of a messy area that's just been shot through, with the exception of this close open high. If it can close back above 103.35 or so, which is right around the lower second, I would start to look at this as like, it's going to bounce, and then we come back to it later, and likely bounce in a bearish fashion if I had to guess. Again, that's a guess. Now, I did mention that there was a bit of a meme trendline regression, or mean trendline regression, if you like, that is beginning to fully break down here on the 4-day. And the 4-day is a pretty powerful time frame. This is indicating, a likely move to the lower second on any closes below the lower first, and it did get a close open rejection as well on the last 4-day, on this current 4-day candle from the last one. So it did test up from the 4-day perspective. I'd be looking at 102.5. Excuse me, from the 4-day perspective. And likely to bounce there from the position of the bands, at least in the lower term time frames below the 4-day, and then we come back to it later. If it does close below, I'd be looking at 102 even, and then possibly the lower third area, but I highly doubt it, to be quite honest, in the 101 area, before at least some more structure starts to build. It knocks around, maybe puts in some lower highs or something going on like that, as this is just a big consolidation high. Yes, it's a swing high with a lower low, swing low that broke. From a closing standpoint, we had just a big consolidation high and to move down. I'd want to see a real lower high put in to really start looking at compression to possible downside expansion. In this case, it's just a big move up to mean reversion on the 4-day. So just be aware of that. Even though it is breaking down from that mean trend line regression, 106.33 is the momentum pivot there. That's going to pretty aggressively updates to the downside in this case. So that number is going to come down. Same with the 5-day. This trend line regression was a little bit steeper here. So this is already considered broken. Does this come all the way down for a full reset? I don't know. 106.74 is pressure down. We're starting to see expansion, but this is just expansion of price action within the Bollinger Bands as they begin compression. So in this case, this is expansion away from the basis to the downside, bringing into focus the lower first as a likely target. And again, this is on the 5-day is going to start moving up, but it is sitting right there at around 102.77 below there. Then we can start targeting that lower second from a band perspective, which is at 101 to be fair, but there's plenty of support in between that it would need to break down from. So again, 102.50 to 102 is going to be the big one to pay attention to. Below there, that's where we start looking at that lower second as a viable target at 101 to 100. Could it get there? Yeah, maybe. Weekly, though, weekly says, 106.74. It's going to be the same as 5-day, but the bands are going to be a little bit different position. No, they're not. That's right. But weekly's headed down. Monthly is going to be the big one. This would be a lower high if it closed anything like this. Here, lower. It's a lower high. But unless it closes below 102.65, this is just going to be a big nothing burger. We do see this is full-on compression, and this was an upside expansion, so we're likely just to see this knock around in compression, and then we reevaluate which way it expands. So if it did start to close below, in this case 99, so $100, it's 98.95, so it'd be $100. It would have to break down from the swing low here at 99.50 and to even consider looking there. But if it did start to expand below there, then it's big downside, likely to see big upside in traditional markets. The 2 month rather is going to be the next thing to watch, because it is still pressured down 106.01 coming into the end of the year. So we're not going to see this close with this current monthly, and we're likely to see this pivot adjust around. So I do suspect that we might even see a false cross down and or a legit cross down with a momentum pivot that shoots to the local highs at like 106, 107. So this is going to be interesting to watch coming into the end of this week, and we will follow up with it on Dixie here. Apologies for the mess of a chart, but we've been calling Dixie pretty damn accurately here. And yeah, it's not quite there yet, so downside still available to it. Commodities, we'll look at gold. Hey, look, gold hit our target to the upside there on the daily. Look at that. So what did the high come in at? 2018. So upper second standard deviation got ran. We got a neutral posture on the band still, but if it does, continue to push this upside upper second, I'd be looking from there 2020, 2030 area. Just above there, we've got the upper third coming in at 2035. I'd want to see a little bit more cool down and or this to start trending above the upper second in order to go run that area. Otherwise, I think it would turn into a big old wick there at 2034, at least on the daily. As long as it's above the upper first, though, here at 1996, I do think it's going to possibly, grind this sideways and up. We do see confirmed expansion. So this is still upside expansion. Momentum supports that at 1986. Looks good. If it does lose 1996, though, it's going to be headed back to the basis somewhere around 1975 to 1980. If it does lose that area right at this close open, then I'd be looking for a drawdown to around 1962 to 1960 or so. You don't want to see it too much further below there, but if it did head down, the lower second is in a position currently to catch it around the lows. So technical support and resistance right there at the 1940 area. I would say you don't want to see that, though, if you are bullish on this heading up further. 2-day supports this move up as well. 1991 is the cross. I suspect that it's going to be chasing price action very closely as it was last week. But if it closes above the upper first, the upper second is fair game. And that is all the way up there at $2,060. And the upper first is at 2004. So I would be paying attention to this coming into close today. Now, of course, it does have to get above that 2016 and the local wick high 2018. Really start testing that weekly resistance up there at 2034 and then come back to it later. If it does lose the upper first, though, it does actually bring into play that basis, which I do suspect is going to be somewhere around the 1950 area when it updates later today. The lower first is now in a very good position on the 2-day. And I actually like this. I want to see the lower second start to compress up, get this nice sideways and up expansion of the upper standard deviations and watch those lowers begin to really curl up towards supports. And in this case, right there at 1893 is good. And you do want to see the lower second above the most recent lows, and that's good. And the theory behind that, by the way, is that price has a big range, very volatile standard deviation range. So in the case of a price crash, that lower second, even if we got expansion below, there's a low directly below there in terms of technical support resistance. So even in a crash scenario, you're likely to see these lower standard deviations get picked up, including that basis right there. So the 1950 area in terms of catching bids, and likely to catch very strong bids when they're above prior lows. 1991 being the pivot's good. The weekly's looking really good still at 2009 if it can get and stay above the area that it's currently trading in. And the nice thing for this would be staying above the upper first on a week over week, and then getting some nice closes above the wick high of this high over here. So 2009 is going to be the area on the weekly as well. To really get continuation to that upper second standard deviation on the weekly at $2,034.35. The upper first here is going to be kind of the line in the sand. Below there, I would be paying attention. Upper first is coming in at 1988. Below there, I'd be targeting 1980. And if it lost that area technical high is put in, then you're talking about Mickey Mouse double tops. I don't think that's what's going on here, but we could still see a run back to the basis at 1940, and it's really only dangerous on weekly closes below 1928, that wick low. If it did lose that area, then it's right back to that big 1893 area where the weekly lower first is now coming in. But because we are seeing expansion, lower second is trading just above this prior weekly lower low. But we do have a structure change now. We've got, higher high trend break, and then higher low. So logical thing to do is to be looking up towards that upper second over time. Whether it happens this week or next week, I don't really have an opinion, but that's, really right now targeting that upper second around 2035, not 20,035. That'd be pretty crazy, though. 2009 would be the pivot, though. 2 weeks going to be pressure up. 1875, and this is really beautiful because the upper second is all the way up there at 2045, 2050. Couldn't hold that cough. Sorry. Now, traditional markets, what are they doing? Let's go ahead and take a look at traditional markets because, they are pulling back. Let's go ahead and look at the weekly real quick here. Closed above the upper first. Brings into focus the upper second. We talked about this last week. This is now $36,048. This is right in the high side structure here, right around this wick high in between the two higher highs here. Just shy of it, about 130 points shy, which is coming in at basically 36.2. That is the next target. From a volatility standpoint, if it can trade and remain above the upper first coming into the weekly close, that is at 35,225. So lower term time frame pullbacks are fine, but you do kind of want to see this head up and especially start taking out this close open over here at 35,465. If it does lose the upper first, the basis is fair game. And again, this is a bit of a downtrend break. So you want to see higher low structure from the weekly anyway. But I would like to see it really push this high and maybe even continue past it a little bit here before putting in, a high and then trying for a higher low. In this case, the basis is coming in at 34.4. which is now above and was actually above this prior wick high at 34,150. So if we did see the upper first lost, I would start to look towards the basis at around 34.4, 34.5 region. You could take like 34.8 or so as being the primary area of interest to the downside. Weekly is going to be heavily aimed up, though, above 32,500. So this is really pressure up. Expansion agrees. So, I don't have too much more to say on that. The daily, you want to see it just continue to grind up. We're seeing a compression. Well, this is above the upper first, which is bullish AF, just so you know. Now, can it turn bearish? Absolutely, but it's usually going to be bullish 9 times out of 10 here. Upper first, if it is lost, though, would begin to compress things very, very quickly. Now, we're not seeing BBWP cool down just yet, but we're seeing Bollinger Band compression. And the reason why that is because of the sideways and up trek that this is on. And in this case, as long as, Dow is above the upper first at around 135, I would say 35 is fine. It's sideways and up, and 35,800 becomes fair game up there at the upper second, although this will continue to tick down a little bit. What I wanted to see is now happening. Basis swooping up at around, guess what? 34.4 to 34.5, right around where the weekly basis band is. And it's right around this gap. And that's where I would primarily be looking if we did see 34.8 at the local range break down. So, it's otherwise it's sideways and up. Below the basis, we now see that the lower first is coming into some important areas. It's not quite there yet. I want to see it above around 33.9 to 34K. Lower second, though, very nice. Crash scenario would be right back to the lows as it is on the daily, and then come back to it later, but probably a very nice bounce. Catch a nice bid before maybe changing structure on some of the longer term time frames. You see Stoke can hang out up here, 35,341. It's probably going to turn down today if it closes like this. Otherwise, I would still be looking for this to oscillate around that area. Looks fine to me so far. Pullback necessary in this case, at least in the lower term. The daily on NASDAQ is, threatening to dance around, possibly get a close open below this upper first. We're starting to see the same thing. We're seeing compression of the band. So we got the expansion, and now they're kind of going sideways and down at the top, but swooping up from the bottom. That is what you want to see. That is bullish, staying above this upper first. So in this case, if it does close open, right on it or below it at 15,955, as long as it's above this 15,900 or so, it can dance around it. But as long as it's above this area to this low at around 15,730, 740 area, it's looking fine. Otherwise, it's probably going to go for the gap fill at 15.5 or so to that basis, which is likely going to be around there. So 15.4 to 15.5. If it is going to get continuation, we're looking to the upper second, somewhere around there at 16, 400 to 500 area, which, looking left puts it in and around or right in the cluster of the all-time high area. If it did lose that, then we're looking lower first. Gap fills, that's coming in at 14,900, 15K. I would say, NASDAQ trading above 15K, the longer it hangs out above here, the stronger it's going to get, actually, in terms of longer term time frames. But the weekly is still looking good above 14,200, so plenty of slush. Upper first is there at 15.6, 15.7 area. What is it? 15.658. So right in between there at 15.6 and 7. Looks fine. And then the basis here is coming in above 15K as well. Right in this daily area that we had pointed out. But again, above 15.3, it's fine. I have no problem, even if it dropped back to the basis here, or even the lower first from the weekly point of view. As long as it's staying above this prior lower low, it's looking fine. Lower second. we're talking long term on a weekly. This thing's bullish. It's pushing the upper second. So when I'm pointing out the downside, I do want you to remember that that's like from here during this current weekly candle, that would be a crash. It would be a massive one. But it would still remain in structure, in position to just bounce its way out in high or low fashion, in my opinion. It's still bullish above 15K. And the weekly is looking to keep expansion to the upside here. This is only just beginning. It's expansive phase on the weekly. Momentum pivot being down there at 14,200, which is literally the lower second standard deviation, meaning that even in a crash scenario, I hope you understand why I keep pointing this out, because there's a lot of really bearish sentiment right now. But even in a crash scenario, that lower second would not violate even the momentum pivot. So it would have to crash past the most recent lower low, which of course would be nasty. And then, bears would be very well validated. This would be a rejection. And then, but as it stands right now, this closed last week above the prior wick high at 15,922. So upper second's fair game, even if it's just a quiet week at 16,135 and higher to 16.5 as we saw on the daily. So let's go ahead and look at SPY. SPY's looking good, hanging on the highs. Again, we're looking at the same kind of scenario across the board here. Above the upper first, if it loses it, and that's at 453, then we're looking down to the low here, somewhere around 448. If it loses that area, we're looking at the gap fill area at 446 down to 440 or so. Below there, that would also put it below the basis. We look to the lower first, and there is a high over here to take into account at around the around 435 to 430 area. And as long as it's trading and closing above the upper first, that still brings into focus the overhead resistance here at 459 to 460, and then the upper second there at 465 even. And when looking left, that puts it right in the thick of the all-time high area. A pullback from here is actually what I want to see. I want to see a pullback, gap fill, maybe even crash it out a little bit further into higher low structure on the longer time frames, to be quite honest. But it can just march. It can also just march as long as it's above the upper first on the weekly, especially at 452 to 453, the area that we just talked about. Upper second's fair game. That's coming in at 464, 465 area. And this is set up for a range, by the way. So unless it closes above that 465, it's more than likely going to reject. If it doesn't, lose the upper first before then. But same to the downside. Lower second is down there at 416, and lower third, it's getting a little bit of expansion to the downside, but it's above the lows. There's still a bunch of support down there. This is just painting a sideways structure at the moment, and it is getting expansion to the upside. Now, that is price expansion within the bands at this point. So it is pointing towards the bias being volatility remaining high within the bands, and being above the upper first brings into focus that upper second around 465. If we saw closures above there, then we're starting to look much, much higher. Basis band coming in around that 440 area. Again, when looking at that daily, that's the big area that I'd be looking for to the downside, because that is also the basis on the daily. So that's kind of it for today's video live stream. It's not a video. I am recording this, but this is our live stream content. We're going to go back to Bitcoin. I'm going to turn on the tunes, and I'm going to peruse the chats here for possible questions. Now, for those of you in the public chat that's running on Twitch and YouTube, if you would like to chat on YouTube, you do need to subscribe to the channel. I had to turn that on because there was bots invading the stream. Now the bots have to subscribe if they want to spam. But in this case, subscribing's free. Throw a like to the channel. That does help as well. But if you would like to chat, ask any questions in the chat box there. after you have subscribed. And I hope you do, because we've been nailing this market like crazy. This has been a long time that we've been calling this market, pretty much to the dollar in many cases. And that's not going to stop anytime soon. And this is not anything super difficult. We're not doing magic over here. This is simple, easy, effective analysis. And for those of you that are new or just watching, the 4 key pillars of trading are what we rely on, and that's trend, support, resistance, volatility, and all of that makes up momentum. So when you understand those 4 components, you can nail this stuff very easily. And for those of you that are new in some of the private chats over there that cannot access the public chats because of your networks, if you're taking Series 24 FINRA exams or Series 57 FINRA exams, I will not be your instructor this week. You are going to have Jimmy back. He is coming back, after today, but he is traveling. So, yes. Yeah, and many of you are only going to be scheduling tests coming into the early part of December, and then there's not going to be much proctored exam stuff going on until after the first of the year. So we've got quite a few new guys. I think there's only like 1 or 2 of you that are going in for proctored exams. Yeah, so we literally have one of each, right? A Series 24 exam. Yep. And then a Series 57 exam. Okay, cool. All right, well, Jimmy's going to be back, and he'll be your stand-up instructor there. And for those of you that are in the public side of things that aren't familiar with FINRA exams, these are just technical charting exams and market maker exams for people who are working in the industry. Yes. Cool. Let me go ahead and turn the tunes on, and we'll take a look around the chats here. So we're going to let's do a Stranger Things theme, or it's a riff on Stranger Things, I believe. All right. There's nothing stranger than listening to a stranger on the internet, looking at a chart and trying to make it interesting. So if you're here, thanks for coming. Let's go ahead and take a look in the public chats here and see if anything's going on. We got Bobby, got Ivan, got Don, got Spin. Hi guys, how you doing? You're the only ones chatting. There's a lot of people here, and you guys are the only ones chatting. So if anybody would like to come in and chat, please do so. If you have any questions, go ahead and drop them in the chat there. Not going to do requests today. We'll get to that a little bit later this week as the week kind of draws on. All right. It doesn't look as though we have too many questions. Cool. All right. Well, I think then if there's no questions, if you can throw me a like there on YouTube, that would be awesome. It does really help the channel. We don't do any paid stuff here. It's just more to get more people involved in trading and learning about trading. Cheryl, good to see you. And hope everybody had a great weekend. Hope everybody had a great Thanksgiving. I know I said this last week, but hope you all had plenty of things to be thankful about. I sure did. And do. It's not like, oh man, Thanksgiving passed. I'm not thankful about anything anymore. Everything sucks. Just kidding. Right? All right. Did I look at the lower? Yes, I did look at lower term time frames. So if you're just joining some of the chats here, you can DVR the live stream, or you can keep watching after the live stream ends. But I covered Bitcoin in depth. I mean, I could look at the hourly, sure. Yeah. Hourly is in a downtrend, and that downtrend could retest that lower second, no problem. It's in a bit of a compression now, so it's more about structure. If the hourly breaks down below the lower second, it's likely to keep expanding down. I would tell you that from the current look, you know, it is starting to compress. Doesn't mean it can't re-expand very easily, especially on an hourly. Any closes below 36,700 would do that, I believe. Yeah, 36,691 technically. You know, and then it's realistically looking to the next structures here, you know, 36K or so. But I would also be aware of the, you know, keep an eye on that 4 hour, 6 hour, which I did cover earlier. But if you are interested, the 4 hour is threatening to regain the lower second standard deviation of the Bollinger Bands, which is a volatility level. And it would be pressure back up, at least initially, be an initial cross back to the upside on the 4 hour above 37,000 or 36,972 in this case. Now it's not there, but if it does close the next 4 hour candle above there, I would extend my targets, you know, to even during this candle to 37 to the wick high here at 37,150. Now, if it breaks out and closes the daily above 37,150, that would be a reclaim of the lower first on the 4 hour, and it would be a low set. Next big area to look for would be the close open of this swing breakdown here, or swing lower high. It's just one straight move down on a close, but we do have a wick high there that was thrown at around 37,850, but I'd be looking right back to around 37,4 to 5 where the basis band is coming in, and then above there the wick high at around 37.7 to the upper first at 38K. That's how I would be looking at it. Bigger moves within a tighter range that could still remain bearish, because this is currently a trend break to the downside, as it did break and close below the most recent low at 37K. So yeah. But the hourly could, you know, is it setting up for a potential bounce to the upside? Absolutely. I mean, 36,750 will continue its bounce to the upside, but it's bearish below the most recent high. And, you know, we're going to see the same areas, right? So many of the same areas that we just talked about on the 4 hour. But again, back above the most recent high at around 37,250. Also above the basis, and then I would extend those targets to the upper first, which is around 37,350 to the local high there at 37.5. Above there, then we look to the upper second. Structurally, that's coming in at 37.5. I'm sorry, this would be, yeah, 37.5. So I already said that. That's around this close open up here would be the next area, rather, at 37.7 to 800 with the wick high coming in there at 37.850. It's still bearish, even in terms of the standard deviation setup as it stands right now. What you'd want to see is some compression, some consolidation that then climbs its way up the ladder here in terms of regaining, you know, the low over here around this high at 37 and 37.1, 37.3 area, and then head up. Most recent, yeah. I mean, if it takes out the local, it's still at a bearish position. But I'd be looking to the next one. It's really around 37.4 to 5. That's going to be the big one to watch. So, yeah. Cool. Like a 15 minute? Yeah, I mean, 15 minutes probably. You know, it's even though Stochastic is head down, 37K is the pivot there. If it puts in a low like it's, you know, trying to paint right here, yeah, it's at minimum going to test up around the basis, you know, just under 37K. If it can get above there, then I'd look to around 37,100, which is the upper first right now, right around these last two highs. Yeah. Cool. All right. Any other questions? Yeah. Okay. So Jimmy is on the call. Is he in the stream? Yeah. Bobby says sick tunes. I like the tunes as well. I need to change them up a little bit though, Bobby. I gotta go grab some more tracks. I got a wonky way that I'm piping this through too, so I gotta clean all that stuff. I gotta clean up all this streaming stuff. I gotta revamp some of the branding stuff if I really want to get the word out and start getting people involved in understanding how to trade here coming into the start of another bull cycle. Excuse me while I take a drink real quick. And again, for those of you that have known me and back when this was a private channel, no, nothing's ever been paid. It's just private channel friends, and then took it public, and it's seeing some success here across some of the social media, but it's all very small. This is basically nothing, right? This channel has around 500 people that subscribe to it. Probably a fraction of that actually watch anything on a regular basis. But this is all free info, and it will remain free. So if you know people that want to learn from somebody that's done this for a very, 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 for way too long, let's put it that way, then get them over here. Tell them to hang out. Yeah. So Bobby says, explained in the last few minutes on live stream. I think he's referring to what I was just explaining about the hourly versus the 4 hour, and then even dropping in the 15-minute. He said, I think Bobby is expressing his satisfaction with my explanation of the time frames and analysis. Yeah. Look, you guys can do this too. It's not hard. It does take practice if you're new. You do need to understand the basics. You need to understand trend. Look, I'm going to say this every single time. This is going to be the mantra that you need to understand anyway. And that's first thing to look at is trend. So you have to understand trend, which means you have to understand what you're looking at on the chart in the first place, which is a record of the auction, right? You're looking at historical auction data and then live auction data, right? So live auction data is tick by tick, and then you're looking at all the rest of the candles are historical auction data, right? And everyone makes their decisions based on what the price was, not what the price is, by the way. If it was something where it is only going to be defined based on where it was, because we're going to make our decisions based on, like, I'm going to long or short it because it is at this when it was at this, so on and so forth, right? So that's just the way the auctions work. Live auctions also is supply and demand, right? And understanding an auction, you got to understand the trend. Is it trending up or trending down, right? And then you got to know where's support and where's resistance, or where are the most likely places that people are buying and or selling, have strong buying and strong selling. Excuse me. Tried to cough away from the microphone that time. But that's your support and resistance areas, and they're very easy to map. Higher term time frame is more important than the 5-second chart, right? And the 5-minute chart. So long-term time frame support and resistance to shorter term time frame support and resistance is the way that you should order the importance. So in Bitcoin, I like the monthlies and weeklies as they relate to the daily support and resistance, and then utilizing support and resistance on the lower term time frames, like I described just a little while ago, by tracking where things are based on putting in a high and a low. Then you look left. Where's the most recent high or low? Where's price approaching it from? If it's approaching it from the bottom side here, then, like on the 15-minute, if it reclaims this low, then we look to the next low, right? And that's where it's headed. So if it reclaimed, it did not pass these lows, it got a higher low. And then where you see highs and lows matching up, so right around this low right here, there's a high, and that's at $36,980, so basically $37,000. Bitcoin reclaimed the prior low on a close and its wicks. Then you look to the wicks, which is 36,926 to 36,980, and that's the next area. It's already tested that right now. It tested into 36,946. Well, what's above there? If it can get past there and especially close above 36,980, and that's a reclaim of this area here and this area over here. And we can take off the swing chart to and the bands to emphasize this, but it's just simple support and resistance on the way back up. But you know, it's for where it's trading. It already reclaimed this low. So where do you look? You look to the next big high area. If it reclaims that, which is confluent with a low, so you've kind of got a zone of interest. You know, then we're looking to the wicks, right? And this close open here. So there's a close open at 37,042. There's another one at 37,055, and then there's a wick at 37,069. Nice. So all you do is you look at, okay, well, there's kind of a zone of interest above that 36,980. So the next area to look as the next big area of interest would be this 3742 to 3769. And I do want to call out that just so happens to be an order block candle, which is something that's also an area of interest. But on the downtrend, there was this there was this little area of interest from this buying that was going on in this candle before the sell-off. Breakdown below the wick lows, made lower lows, rejected that area a few times. But you have to have a purpose, right? So you have to understand trend. You see that it's still a downtrend. It did try for a trend break, and it's a downtrend again. Higher term time frames, it could double bottom, but it's not there yet. Until it breaks this last resistance here at around, on the high side there, 3769. Gotta love it. It's not even in trend break territory, but it would be a trend break, and or it puts in lower high right here, and then this wick high becomes the trend break, but it would have to do a 3 candle high. So it's always trend, support and resistance, and then volatility. And volatility metrics are what the Bollinger Bands are. You can see volatility is fairly high but coming down, and trend, support and resistance, and volatility all make up momentum. And those are the 4 keys to trading. And you can accurately predict where price will head, and based on the areas of interest. In many cases we're doing it to the dollar, and it's not that difficult. It's just understanding what you're looking at, practicing, and paying attention to how price moves. And I think one of the key pieces that most traders miss or don't incorporate into their analysis and can sometimes lead them off track is most traders don't incorporate volatility as one of their main metrics. It's just kind of like a side metric for longer term time frames or something like that. But if you have upward expansion and volatility on the weekly, and you get daily downward expansion, that's mean reversion on the weekly, even though it could be daily downward expansion on which is bearish on the daily but bullish on the weekly. So that's where, once you understand the basics, you can then understand how things work in the context of volatility. And volatility is one of the main things that it's, in my opinion, just as important as understanding your trend and your support and resistance. You need to understand volatility. If you do not understand volatility, momentum doesn't even matter. You shouldn't even be paying attention to any of that till you understand trend, support and resistance, and volatility. Then you can use any momentum indicator you want. I don't care if you use, the market ciphers or, of the world, or, What's the new one Crown partnered with? Chart Prime volatility metrics or volatility statistics or any of that. None of it matters. The best way to look at it is to understand volatility, and then you can predict much more accurately based on the historical data that you already have, or the statistical volatility data that's live and being presented in front of you. You don't need all the other metrics. I like, Crown does a lot of stats, right? And you'll notice that every time he calls out like a day that's typically been read as either a positive or a negative day, it always ends up the opposite. It's very low hit rate in terms of its accuracy, because within there you have literally a 50% margin in both directions. So the only way to accurately predict which way things are going to go is to understand where it is on support and resistance, and then where it is in terms of its volatility. And you can determine directional volatility. It's either above or below the basis band, and volatility expansion will be above the upper first, upper second, or below the lower first, lower second. And you're either going to see reversals or you're going to see expansion to contraction. And once you see contraction, expansion's easy to pick up. Like we saw a contraction on the 15-minute back here. It rejected the upper second, and which is typical to reject the upper second area, and it's typical to reject the lower second and third area. When you start seeing closes through it that then break down from closing structure, right? So we started to see closing structure break down on this candle over here very early in the morning for me on the 23rd or 27th. I was reading the date, the year, on the 27th, which was today. It was very early in the morning. Why would this be the 23rd? This is a 15-minute chart. Then we know that the wick is in play. If the wick breaks on a close, then we're looking for further expansion to the downside. So that's where, your trend, which this would be a trend break to the downside, right, on a close, and then support and resistance, and then volatility all play in this downward momentum move. So understanding how all of that plays together is really, it will level up. Even if you're a good trader, it will level you up to the next level. I mean, I'm not joking. We're at about somewhere in the high 90s for hit rate. Now I am trying to get that built into the indicator as well, but even then you have to know when not to take a signal, right? And that's where understanding of all of these components, these four main components, three main components that make up the fourth, which is momentum. Then, once you have a really solid understanding, and the reason why I built my own custom indicator and asked Caretaker if I could use his source code for BBWP, is because it's a really honed system. I just want it all in one place. Now it's about adding in the confluence of an indicator, but it has to give you the proper signals based on what we just talked about, basically. And that's a little bit more difficult because sometimes the way that the code wants to interpret what your intentions are a little bit different. So working on it though. I mean, Chart Prime's cool, I guess. There's a lot of big time developers there, and then I think Crown has some kind of signal thing going on. It seems pretty neat for those that can afford it. And really, you don't want to just go out of your way and buy stuff that you cannot afford, because it's not going to turn you into a good trader, right? Like an indicator or a set of signals is not going to turn you into a good trader. You have to be a very good trader that just is looking for ease of or optimization of setup at that point, right? If you have the money to plunk down on that stuff. And otherwise, there's tons of free indicators that you can look up, but you don't even really need indicators. You can use the free built-in Bollinger Band width and percentage, which is going to tell you basic volatility metrics, or just BBWP, which is free from Caretaker. Then you've got your volatility component, you've got bands, you can look at support and resistance, you can see trend pretty clearly, you understand all these things, right? It's nothing overly complicated, it's nothing too complex. Throw on a nice to have is like a Stoke pivot. You don't even need it. If it puts in a low, which it's working on, whenever it does put in a low here, which right now would be above this most recent rejected wick high, right? Above the close open, you'll get a technical low, which is right now at 36,908. You'll get a close open low, but you want to see it take out that wick to really get the low set. And that low, that high right there at 36,964 again is right up against this low, which is this order block candle over here, which is the area that was rejected that we just pointed out, right? So, or this guy up here rather. Oh man, I made it almost all stream without doing it. But yeah, good stuff. And yes, I have videos that are coming that will go over some of this stuff, but I'm remaking them as I've gotten feedback over time with you guys on what it is that you have questions about. It helps me get that aggregated into my presentation of these ideas. So we'll start with how to read price action and trend, and then move into swing fail patterns. That's all part of trend. And then support and resistance, which is based on trend. And then we'll move into volatility, reading volatility metrics, using bands to gauge volatility levels of interest, for expansion and contraction, as well as support and resistance when they line up, and then how that fits into momentum. And that'll be the primary for that's the primary thesis for the way that I trade even guys that are going into the professional field. Now, of course, they need to know a lot of different stuff that's even beyond charting. Plus, for those guys taking 57 exams, they need to know like the book, by the book stuff as well. So yes, there's other chartered technician exams as well. Yes, there is. Excuse me. Yes. In fact, I think it's called the chartered technician exam. Guys in the field do use it. Yes, you can get in. It's not. You still might need to get a FINRA license depending on where you're going to work, but the chartered technician exam. I'm being asked about this from guys that are doing FINRA stuff. It is going to be different than what you're taking in FINRA. It's going to be quite a bit different. It's a lot more detailed than some of the stuff in FINRA, especially if you're doing a 24. Although 24 and 57 are very closely related. A lot of it is regulatory stuff. You need to know all your regs as well. Yeah, I'm looking it up. It's a CMT Association, Chartered Market Technician exams. There's 3 levels, and then there's partnerships and stuff like that. Jimmy has Jimmy taught CMT? I mean, it's been around for a little while. It's not, when I say a little while, it's been around for a long time, but it has not been something that has been required for working in a prop shop. Some places do want you to get it though. I want to say it's been around for a long time, but it's only recently started to make a comeback in terms of places that want people to have it. It's more about being It's more about being in compliance with regulations and the SEC. Yeah. I would recommend it. Yeah, you can do it. If for those of you guys that are taking FINRA exams, I would actually suggest that you go and look into CMT. They have educational materials, webinars and stuff. I think the webinars, though, I think they are, yeah, you have to get in on the event, and they are spread out. So it's a lot more, long form. You should go in understanding all of your different charting stuff. You can go and explore the site. You see there's registration fees. $625 for early registration for their, November 6th to 2023 to February stuff is ongoing. My bet is, you gotta get the curriculum. But yeah, it gets a little pricey, but it's not even as pricey as some of the, if you guys weren't in there with Jimmy in a place that's doing it on site, you'd have to, if you had to pay your own way, FINRA exams are not cheap for the training. Yeah. But yeah, so member benefits is where you get you can link up with other people. I want to say there's somebody that Crown hangs out with. I say hangs out, like that dude's all over the world. By the way, he won that crypto fight night. He got robbed. Anyway, I want to say, is it Fibaswani? Maybe it's Fibaswani that's a chartered market technician or whatever. I want to say that maybe it's him. I'd have to go look. He's got one. He's good. I mean, like, he's Fibaswani for a reason. Like, dude's all about fibs. Excuse me. Yeah. Yeah, so to become an affiliate member, you get annual dues and you get access, I believe. I think for most of you guys, if you're going to be, I mean, you can start, if you have no, and this of course would be secondary to what you're studying for in your FINRA exams, but if you wanted to go and become an affiliate and just get started with it, I mean, again, it's expensive, so you got to be using it. But if you're getting licensed, FINRA licenses, your primary role is going to be charting, and I mean, some of you guys are going to go into RM. So, but you're going to be wanting to go for you're going to want to go for this over time, and this means that you're going to be in the field, working in the field, and then they're looking for professional members to be contributors to the actual programs as well. So there's money to be made there as well. Yeah. Me? Should I do it? I mean, I'm happy sitting on my butt at home just doing this. Right? I mean, maybe. I mean, if I just really want to go expand into like another arena, sure. But it's not anything that has interested me just, at this point in my life. Yeah. I mean, I'm basically semi-retired. So I'm good. Yeah. Yes, I'm a lot older than I sound. Cool. All right, I think that's going to do it for today. I want to thank everybody for hanging out. For those of you that are, you know, just coming into doing your FINRA, getting your FINRA stuff started, you will meet Jimmy. He will be back from vacation tomorrow. I see he's already chatting with some of you guys over there. And he's the man. He knows what the hell he's doing. So, and I want to thank you guys for participating and putting up with me as your instructor for a week with a day off. All right, and for those of you that are going to be coming into exams in the next, into December, go take some rest and take a break away from everything for like a day or two, and then come back to it and really start jamming on your test prep. Test prep is going to be different than the practical stuff, right? So give yourself a little bit of time. That's my advice. And yeah, and for those of you hanging out publicly, I want to thank you for hanging out with me today. I want everyone to have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please, please, please trade safe. And of course, as always, stay safe. And we're going to go ahead and put this end of stream timer on. And yeah, I want to, again, thank you. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please stay safe. Above all, stay safe. That way you can trade safe. And with all that said, Landy out.
CBR Street Gang, this is Almighty. Standing by, over.
The Army Air Forces has announced that a flying disc has been found and is now in the possession of the Army.
CBR Street Gang, this is Almighty.